Diana, stay right there. Our next guest says that new home sales for October could be the exception rather than the rule, as other metrics he's watching closely paint a different picture for housing demand. So joining me now is Andy Walden, Vice President of Enterprise Research at ICE, tracks a lot of what's happening with the real estate market. Andy, you just heard Diana's report there. I'm curious how you interpret it and whether or not there is a constructive path forward for home owners and home sellers, again, into the spring shopping season.
Yeah, I think you're right. And again, new home sales are the exception to the rule of what we're seeing in the month of October. If you look at existing home sales, they were up 3%, a little over 3% month over month. Purchase mortgages were up a little over 4% month over month in October. Now, Diana mentioned this is kind of a leading indicator of what's to come and some of the reasons behind that. The other thing that I would point to on the new versus existing side of the house is a lot of that new construction and new home sale activity comes in the South, as Diana mentioned, and that's the area where you're seeing existing homeowners willing to list their homes for sale. So that's where you're seeing some competition between new construction and existing home sellers in the market. Whereas when you look at some of those markets that are hotter, the Midwest and the Northeast, less building taking place there, less existing inventory, which is keeping home prices firm.
So how exactly, Andy, do those geographic dynamics start to kind of paint some kind of equilibrium picture as we head into next year? Are there going to be places where we do see a little bit more of that blending between the existing home market and the new home market to kind of maybe balance out the picture for would-be home buyers?
Yeah, and I certainly think you're going to continue to see geographic differences. Now, if you want to look at areas where you're going to blend and have more competition, again, the South is where you're going to see that type of activity. But as we've seen over the last year or so, the Midwest and Northeast are the hotter portions of the country. They're going to continue to be that way because of relative affordability in the Midwest. The Northeast, you're not seeing as much building there, and existing homeowners aren't coming to market. So in some of those hotter markets in the Northeast, you're still seeing 50, 60, 70% inventory deficits. Whereas when you get into some of these southern markets, you get into Florida and Texas, inventory is back to or above normal levels, and you have more new construction taking place in those areas as well. And so you're seeing softer home prices in those areas. They're among the few markets where prices are down year over year. Florida starts to jump out. You've got some smaller markets in Florida where prices are down now 6% year over year. And so that's where you're seeing a little bit softer dynamic. But I expect to see some very geographic differences in home price trends as we move into 2025 as well.
Real estate is definitely local. Diana, we all kind of understand that concept. I wonder from your standpoint, if you look out for the next, say, 3 months, just for the next 3 months heading into that spring shopping season, what do you think needs to happen in the housing market overall for the housing market in spring to actually have the best start it possibly can?
Just one answer, lower mortgage rates. That's what we're dependent on right now. And you see it in the numbers. I mean, as Andy pointed out, you did see that jump in existing home sales in October. But remember, those are based on closings. So those were contracts that were signed in August and September when rates came down to their recent lows. So going forward, we don't know that we're going to see those kind of existing home sales unless mortgage rates pull back more. Because really, as you get closer to 6%, that's when you see more buyers come into the market. And again, December is kind of the dead season. So you don't see a lot come on the market. Sometimes you see more people want to get in January and beat the spring season and get in and buy before prices go up. But Andy, I wonder from you, do you think that the builders are going to be able to keep buying down mortgage rates and keep giving lower priced homes if they're paying more for lumber, if they're paying more for labor under this new administration?
It'll certainly put some pressure on them. I think the one thing to keep in mind is a lot of those new homes have been under construction for some time, so the labor's already been paid for some of the stuff that'll come to market early next year. But to your point, if those tariffs start to pick up, obviously some impact on new construction. Diana made another good point there about October closings coming from September demand out there in the market. And we have seen a little bit of pullback in mortgage application. I think a positive sign for the housing market, though, if we look at where we're at in terms of demand right now, just simple purchase applications and folks applying for loans out there in the market, we're currently sitting at mortgage rates around 6 3/4. Last time we were there was late July, early August. We're seeing a slightly higher demand right now than we were last time rates were at this dynamic. So certainly a little bit of a pullback that'll come from this higher interest rate environment, but still relatively comparable and even slightly better than what we were seeing last time rates were at this level.
All right, Andy Walden at ICE and Diana Olick, thank you both very much for the robust real estate discussion. We'll see you folks later on.